the December quarter, Australian shares and other growth investments posted positive returns. For example, Australian shares returned more than 2% for the December quarter. However, that masks very choppy markets day to day that we observed through the quarter. The choppiness is because investors remain very concerned about the European debt crisis and how it may or may not resolve itself in 2012. We responded in two ways. Firstly, by holding a portfolio of asset classes that respond differently to different market environments. This overall diversified portfolio produces more stable and consistent returns in what remains a choppy market environment. Secondly, we continue to keep a very close eye on developments in the European debt crisis, adjusting our exposure to each asset class in order to protect the overall portfolio. For example, in the December quarter, we increased our exposure to alternatives, such as infrastructure, and decreased our exposure to traditional investments, such as shares. This is because alternatives are less sensitive to daily developments in Europe and elsewhere. The key for investors is to stick to their long-term strategic investment plan and avoid being thrown off course by daily news headlines. For example, developments in Europe will continue to be a source of choppiness in markets for the foreseeable future. However, our global investment team has identified a number of great opportunities in areas such as Australian infrastructure, US and global shares, and corporate bonds. We'll continue to actively manage our diversified portfolios to capture these best available ideas.